Gold Coast property market has shown strong growth over the last 2 to 3 years, with both houses and units showing significant increases in value. So what's in store for the next 6 to 12 months? Well, let's have a look at some of the positive and negative factors that will affect the market. The Commonwealth Games held in April on the Gold Coast were widely regarded as a success and showcased the coast to millions both nationally and internationally. The positive effects on tourist arrivals, potential investors and those looking for a fantastic place to live will be felt for some time to come. The Gold Coast has experienced strong population growth over the last 12 months to once again become one of the fastest growing urban areas in the country. The huge increase in home prices in Sydney and Melbourne over the last few years has made the Gold Coast home prices look much more attractive by comparison. More than $1.5 billion was spent in the lead up to the Games on new sporting and transport infrastructure, including the light rail system being extended to Helensvale in the north to link with the main rail line to Brisbane. But there's more to come. Plans are well underway to extend the line south to Burleigh and eventually to Gold Coast Airport. Work has also begun on widening the M1 motorway south from Varsity Lakes. And a health and knowledge precinct is growing around the new Gold Coast University Hospital and adjacent Griffith University. Tourist numbers from both interstate and overseas have also increased significantly over the last year. The Gold Coast home rental market has been experiencing a low vacancy rate and median rents have increased in excess of inflation over the last 12 months as a result. This situation has eased somewhat since the Commonwealth Games, but is still regarded as being an attractive market to investors. Finally, the apartment market on the Gold Coast is not in an oversupply situation, unlike some of the larger capital cities around the country. So those are some of the positive factors affecting our market. Let's now have a look at some of the negative factors that are coming into play. Traditionally, many homeowners in Sydney and Melbourne have used the increased equity in their own homes to buy an investment property on the Gold Coast, often with a view to eventually retiring here. The decline in house prices down south has had a dampening effect on this investment flow. The Banking Royal Commission has not painted our major lenders in a great light. While bank bashing seems to be a national sport, it's a case of be careful what you wish for. There is already evidence of banks tightening their lending criteria, especially for investors, meaning that fewer people may qualify for a mortgage and the amount they can borrow is likely to be less than what it was before. The Queensland Government has more than doubled the additional foreign acquirer duty for foreign investors from 3% to 7% with effect from 1st of July this year. While this move is designed to help first home buyers, it will have a dampening effect on the values for existing homeowners. It seems unlikely that the Reserve Bank will increase official interest rates anytime soon. However, with interest rates rising overseas, the funding costs for our banks have increased. There have already been examples of out-of-cycle interest rate increases from some of our lenders. Difficult Brexit negotiations and tit-for-tat tariff increases make the international economic outlook more uncertain than it has been for some time. A significant increase in trade disputes would likely put a strain on the global economy. Australia will not be immune from this. So how will these factors play out in the Gold Coast property market? The positive factors are mostly local in nature and will serve to underpin the local market in the short term. The negative factors, however, are mostly national and international in nature, and inevitably they will flow through to local market sentiment. Spring is traditionally a very busy time for the Gold Coast property market, and activity over the next few months will be a great indicator of where our market is headed in the next year. I'm Steve Houlihan from Houlihan Realty. Thanks for watching.